So everyone knows that the stock market can be pretty volatile at times, but not everyone knows what happens to options when trading is halted. Now, a stock trading halt, that's when the exchange stops trading a particular security for some time, and it could be a few minutes, can be a few hours, can be days. Now, options are contracts between two parties, and they give the holder the right to buy or sell an underlying security at a set price on or before a certain date. Well, this does not end just because the market has been halted. So what happens? So there's three levels of circuit breakers that you should know about. So if the S&P index experiences a 7% drop from its closing price between 9:30 and 3:24 Eastern Standard Time, a level 1 circuit breaker halt will be initiated, and it pauses all trading on all U.S. exchanges for 15 minutes. Now, during the normal trading hours of 9:30 to 3:24, a level 2 circuit breaker will suspend all stock market activity if the benchmark indexes drop 13% from the previous day's closing price. But after regular hours have concluded at 3:24 until 4 p.m. when trading ends, stocks are still free to trade as long as they remain below 7 or 13%, which just happens to be level 1, level 2 circuit breakers thresholds. Now, should the S&P 500 experience a downturn of 20% or more from its prior closing price, all trading will be suspended until 4 p.m. Eastern Standard Time, and that's a level 3 circuit breaker. So here is an example. This stock was actually halted at 9:30 and 56 seconds after putting in an 84% jump in price. Now, if you had bought puts for this stock, you could see how much trouble you'd be in. So when stock trading is halted, there's going to be no new trades until it resumes. All open orders will remain in place until stock trading begins again, and they can be filled. This means that you won't be able to buy, sell, or exercise your options until stock trading resumes. So if you have open positions in the affected stocks, you may need to wait until after the halt is lifted before you can make any adjustments. So during a halt in trading, volatility and price quotes, well, they can change dramatically since no trades are being made. So this means that prices may go up or down when trading resumes depending on the market sentiment. But it can also create opportunities for traders who are willing to take risks during these times of uncertainty. So it's important to remember that this volatility can actually work both ways. So it is best to approach these situations with caution. Do your research before you make any major move. Also, the price of options, they use the underlying instrument as the core of the pricing model. So without an up-to-date price quote for the stock, well, the pricing of options is not going to be accurate. So what can you do until trading resumes? Your hands are tied, right? Don't panic. And sometimes it can feel like an eternity when you're waiting for trading to resume, especially if there are open orders involved. But try and make the most of this time. Do some research on the company or the sector you're prepared to trade. Same time, if you have any pending trades that haven't gone through yet due to the suspension period, well, use that opportunity to review those trades and see if they still make any sense given the market conditions, and even ask yourself, did you follow your trade plan? But at the end of it, just take a few seconds, relax. Remind yourself why you got into trading in the first place, to make money, because this stuff's going to happen. So to recap, halts in stock trading, they can have serious implications for those who trade options since there's no new trades until that halt's been lifted. Expiration dates may not be valid if they fall within the time frame of the halt itself. Additionally, volatility, price quotes, they could change drastically during these times. So traders need to stay up to date with market news and adjust their strategies accordingly when necessary. When you know how halts affect options, it can help you make sound decisions even during these times of uncertainty. And if you're looking to get started in the markets, we have a thing called Dynamic Duo. It's a free PDF guide. You can download it. It has all the information that you're going to need to trade two highly successful markets and potentially see some pretty decent results. Plus included is our one-day options trading strategy. There's a lot of potential there for success for those who do the work. You can download it, links to the left or down below in the description. Thanks for watching.